Welcome back to the NITE Economics YouTube channel. And today we're going to be looking mainly at the price of crude oil. Again, if you're liking the content, please subscribe to the channel, drop a like, it's very useful. And if you have any comments, drop them down below. If you want me to look at something specifically or talk about a specific subject matter relating to markets, let me know in the comment section. So let's get right into it. So today we're looking again here at crude oil. So over the weekend it has spiked significantly. Last week it closed over here. Closed. What was the closing? 60. Sorry, not 67. At 91 bucks, and it opened up this week and it skyrocketed all the way up to 100 and what was that? Almost 120 bucks. Mind you, the all-time high for oil is 147 bucks. So from that spike high there, it's not too far. It's very close. It's what no, that's still quite a big jump. It's another 20% from that high, and then from current levels, I mean, it opened up today more or less here at 98 bucks, went all the way up to 120 bucks or so, and now it's pulled back significantly. So to get back to that all-time high, you still have to go 53%. I think we still have some time to go before we get there, if it actually even gets there. So this is on the back of the news, or this rally here is on the back of the news, obviously, of the war is happening over in the Middle East between Iran, the United States, and Israel. And over the weekend, a bunch of oil refineries were hit over in Iran, as well as in ones that are controlled by Israel. So obviously that's gonna spook markets, and you're gonna see prices like this happening, right? You're gonna see, markets don't like uncertainty, and that's gonna create a lot of uncertainty, especially when a war breaks out and crucial refineries in the Middle East are being bombarded, and that could, cause prices to go up more into the future, I would say. And I think initially the world likely has enough on hand to last a couple of weeks, if not a couple of months. But the markets are forward looking, so you're gonna see movements like this happening as soon as something like that breaks out in the news, essentially. And then also my understanding is that like 20% of the world's crude oil flows through this particular bay there, in between it's like in the Horn of Africa there. I don't know the exact geography, but that could cause some major shocks in the supply chain, and in the next couple of days and weeks, and we'll see how that affects markets, particularly in Europe. I think will be hit particularly hard. I don't think it'll be so drastic over in North America, but we will see. So yeah, that's what oil is doing, and this is also very significant because oil hasn't been above every single major moving average on the weekly since all the way back here in summer of 2024. How about in the monthly? In the monthly it was yeah, the last time it was above all. It's the same thing pretty much since like summer of 2024. So yeah, so like it's so volatile looking. Let me remove these previous. Yeah, so it looks very choppy. It's like oil has some crazy moves. If you look at it, remember this during the Corona dump. Wow, that's insane. It went to negative. That's insane. But yeah, so yeah, I do expect, especially if this conflict over in the Middle East continues, which I'm assuming it's going to, but I'm not an expert on these things, so I do expect oil to get back to previous all-time highs, if not break those numbers. At this point, it just seems like it's just there. It's so close that, and it happens so quickly from being in this lower level that give it another month or so, I'm sure it'll get up to those levels. And then we'll take a quick look at gold. Gold is interesting here. It looks like it's right now, it's kind of pulling back right now a little bit. I'm still super bullish on gold, generally speaking. I think it's just creating a higher low before it continues higher. Like I've said before, I do believe that gold is not over, and I think it will rally into, especially with what's going on over there in the Middle East, it'll rally into Q2 of this year. Again, when there's uncertainty in markets, the money wants to move to safe havens, and that's gold and that's U.S. Treasury. So we'll see how that plays out. And the S&P 500 here is essentially bounced here, very close to that 200 day simple moving average. Very close, not quite there. So now it's sitting at the 618 retracement level. So yeah, again, this is not. It looks like it's doing nothing essentially, but it is below these major moving averages on the daily. Is below the 5, 15 and 25. Sorry, 15. I made a mistake there. The 21. Sorry, the 5, the 21, and the 55. Let's look at it from a weekly. Yeah, to me, I think this, especially if it closes, if it can't reclaim these moving averages here. Actually, I wanted to see if it created a silver cross. I think there is. Yeah, yeah. A silver cross has officially been crossed from last week, right? It wasn't official last week. Um, yeah, the 21 was still above the 55, but yeah, opening up this week, the official silver cross has happened, and every time that happens. Excuse me, I'm not gonna edit that out. I don't edit my videos. I'm sure you could tell. The last time that happened, you had a silver cross. Happened right here. It tested the in this case the 20 in the daily. It tested the 20 simple day moving average, and it went significantly lower. And it actually tested the 377 exponential moving average, and it broke significantly below that. Let's take a look at. I guess this won't really. No, this won't really show here on the weekly, but I mean, if it continues down here, the 5 exponential moving average will move below the 21 exponential moving average, and when that happens, I mean, this is what happened last time that happened. So it almost got all the way down to the 200 simple weekly moving average. Not quite there, but very close. But yeah, I think we could expect some price levels over here down to get to at least this 55 exponential moving average on the weekly. Even here, it's so close to getting there, to having a cross there. And I think we'll really know by the end of this week. Maybe it pops back up and it prevents that from happening. But what would that look like? I mean, if it creates a lower high over here, it would be a head and shoulders. And I'm pretty sure that's not a good that's not a good formation. I'm not big on the patterns. I just kind of look at moving averages and stuff, but yeah, that's not a good one. So we'll see. I mean, there's still some time to play out. We'll see what happens. But this chart right now is looking like it's more likely going to break down. And yeah, the situation over there in the Middle East, I'm sure, is not helping. And it's very interesting. Ben Cowan puts out some great videos, and he put about a video recently about the likelihood of a recession happening and what are the things that need to be in place. One of them is, the stock market breaking down versus gold, just breaking down in general, even in dollar terms. A spike in oil and energy, and sometimes that even happens into the recession. But right now we're seeing a massive spike in oil, and then the third component is a non-linear increase in the unemployment in the United States, and we're not seeing that right now. But I made one of my previous videos talking about the unemployment in the United States and how it's slowly starting to creep up, and it's been creeping up since I think 2022. It's been slowly creeping up, and that's actually the first time it started creeping up like that without having a recession happening. But what triggers a recession is when you have an exponential move. It's not it's a non-linear move to the upside, so it just starts to move exponentially up. So that means you get a lot of layoffs. You get a lot of layoffs, it creates a negative downward spiral. So especially if you have a dump off in the S&P 500, then companies are going to start laying people off, and then people are laid off, they can't spend into the economy, so the markets dump even more, which creates even more layoffs, etc. So it's a negative downward spiral. And yeah, that's all I have for today's video. Again, if you're liking the content, please subscribe, drop a like, and I'll see you guys next time. Take care. Bye.